Hello traders everywhere, Adam Hewison coming to you from the digital studios of MarketClub with your midday market report for Monday the 10th of June. Well, lots going on today. It's Apple's big day, and way to go Google, or should we say Waze to go Google, because they've just purchased, or they're purchasing the Waze social media navigation, and we'll be looking at Google, Apple, and Garmin. How's it going to affect their business? And also Pandora, how's it going to affect their business? As Apple's rumored to have the iRadio started. So let's get started looking at the markets with our portfolio. And here you can see our portfolio. We're going to zip through the equity markets very quickly and then get right to Apple, Pandora, Google, and Garmin. So stay tuned. Starting with Dow. Dow basically is, according to our trade triangles, you should be out of this market right now. We've got a red weekly trade triangle. The recovery is definitely underway. We've had 3 strong up days. Let's see how that continues. Same with the S&P 500, much the same with NASDAQ. Of course, that's been helped dramatically by Apple today and their conference, which started today in San Francisco. There'll be an announcement at 1 o'clock, pretty much the same time this will be available to you. So we'll see how that things play out there. So generally speaking, the equity markets are sideways mode. Generally, the longer-term trend is up in indices, and we expect these markets to continue to trend higher. Looking at gold, gold is looking dismal, dismal, dismal. And a lot of the glisten has gone off this market. And this is why we see this market evolving, because it looks as though, to me, it's just a steady progression of steps. And just to give you an idea of these steps, you're sort of going down here, then down, sort of stepping down. Every step is getting lower. The question is, are we going to take out this 350 area? If we take out the 1350 rather, if we take out 1350, we can see this market really coming under a lot more pressure. We're seeing this target zones. We still have lower target zones down to about 310, 315. So we'll have to see how that plays out. The market is a little bit oversold, but it could get a lot worse than we are right now. Trend minus 100 tells the story. The trend is clearly on the downside. So let's go to our next market. Let's clear that screen. There's a lot we want to go through. I'm going to spend much more time with the equity markets today and looking at crude oil. And here we are. Crude oil, 65, both the weekly and the monthly down. Only the daily is up. You should really be out of this market as it's a trading range, 65. I would say just stay out of this market for the time being and resolve this sometime when we get a clear break over the $98, $100 level. Then we can really get excited. The one thing potentially that could be shaping up in this market is this, and I'll just draw this on the screen. This is a very powerful setup, and that is a potential for a head and shoulders stop. If we see the market basically move over, I think, the 98 level, that will be a confirmation indicating that this market go from probably to the 108, 107 level on the upside. So that's something to pay close attention to, and that'll be screaming for electric cars when that happens. So let's clear the screen and go to our next market. Next market's going to be the Eurodollar. Eurodollar has got a lot of people perplexed because it's actually going high. If you saw a video on the 7th, which is Friday, you'll notice that we are calling for this market to go back up to the 135, 136 level. I think that's very, very much in the cards right now. The trend and this particular formation, if we just put it on, is a very powerful one, and we talked about it, and it's just simply a double bottom right here. The pivot point we talked about, and the target zone is about the 136 level, which dovetails very nicely with this previous high. So we are bullish on this. Our trade triangles, of course, are 100% indicating the euro should go higher, the dollar should go down. So let's see how that plays out. And let's go to our next market. Apple, the apple of the eye. So this is what's happening in Apple right now. And we see this area in Apple as being a very, very large consolidation phase. And I'm just going to draw a square around here. So this is how we see this market, just basically this big consolidation phase that's been taking place since February of this year. Obviously, Apple has had a big drop over the last year or so. And if we go out a year, you see we've been up as high as 700 and change. We've come all the way down, and now we're sort of flattening out. With the Apple Developers Conference in San Francisco today, it could be the change that we're looking for, but the key areas to look at right now, in our opinion, are going to be the 460 area. If we see a market close over, let's scope this in even closer. If we see it close over, let's say the 465 area, I think you want to be long this market. 465 would be definitely a kickoff point for us to get long. Our trade triangles would all be bullish at that point in time, indicating a move from the 485, 385 level to here, that you're talking somewhere in the region of about $75. So we were looking somewhere in the 545, 50 area on the upside for Apple. So watch this very carefully. The 465 area is key to Apple. So moving on to, also they're going to be announcing, it's rumored to be announced, they're going to announce the iRadio or something close to that, streaming music. Now, what's that going to do to a company like Pandora? Well, Pandora has been improving itself. The longer term trend is up from 11.15, as you can see right here, which is the monthly that was way back on the January 14th. So it's been doing pretty well. But having said that, if you scope this out even further, and this is what I want to show you, let's go to the max. You'll see really Pandora is sort of being flat. It's had some nice move up from this area that we caught very early on in the beginning of this year. But the question is it going to survive an onslaught? The difference is between Apple and Pandora is this. Apple has 500 million users that use the music service. Pandora has 70 million. Apple has the tools, it has the hardware and the software. I think it could be a real game changer for Pandora. So I'd watch this stock very, very carefully, and certainly if we see it start going below 13, that could be a really bad sign for this market. So let's go on to our next market. Google. Google acquired, or has acquired, Waze, W-A-Z. It's an Israeli company. It's social networking GPS. Very, very cool. Highly recommended. If you don't have it, it's a free app. You can get it on the Apple iPhone and iPad. Really like the app. So again, we have a big breakout in Google. Here's what we're looking at in Google. So looking at the bigger picture, if we go back here to here, we see this is really a consolidation phase. This whole period from October of 2007 all the way through to October of 2012. So almost 5 years the market's been going sideways. The breakout we saw over the 750 area indicates we can see this market go much, much higher. Certainly $1,000 would definitely be in the cards for this particular stock. And the reason I say that, I'll show you why. Let's just take this off the screen. Actually, let's just leave it on the screen, and let me get my drawing tool on here. So here we talked about having the, let me put the box back on, this particular consolidation. And then we have the move from, let's say, the lows. I'm going to call this, just for argument's sake, 300 on the downside. It's even lower than that, but I'll say 300. And we'll call this on the upside 750. Okay. So if we take 750 and add 300, it gives you 1,050 on the upside. And that's our target zone for this particular stock. Currently trading at 890, 889, and we can see this market improving from these levels. So let's just watch that very, very carefully. This is a good sign. Let's get close up on this market. Let's take our Fibonacci off, and you can see that we're actually up on the day quite nicely. Let's get close in so you'll get an idea. So there's today's action. It's up about 1.16%, and it looks like it's making that turn to go back. Also, if you look at the Fibonacci just from the retracement point, you scratch that down to there, from the highs to the lows, nice 38, almost a 50% pullback, and we've come back up. A good sign for any stock. Plus, it's not overbought. Lots to go on the upside in that stock, in my opinion. Now, Garmin is going to be the stock that's going to be affected in this. And as you can see, Garmin's two triangles down. Trend is down. I don't think it's going to do very well as more and more people are accessing GPSs and mapping systems on their smartphones. They may be licensing their products out to smartphones, but that's what we think is going to happen. Garmin's going to go really nowhere, and they've lost their lead as technology has changed and is leaving them behind. So that's about it for today. We've covered all the markets. Thanks for watching this video. I hope you found it helpful.